Hello, everybody, and welcome to this week's podcast here. My name is Miles Clark. I'm joined by a very special guest, Tom Dorsey. How you doing?
Good.
Well, it is we're recording this on Wednesday, the July 23rd, coming out on the Friday, the 25th. I'll tell you this, this is our 100, or excuse me, 1000th and 1005th podcast. I went back and did some homework. The last time you were on the podcast was over 300, 400 episodes. It's been a little bit since you've been on. What brings you into the office today?
Well, Danya, one of your interns here,
Yeah.
good friend of mine, and I'm mentoring him, and he worked it out for me to come here. I come here periodically and
Yeah, yeah,
sign
yeah, yeah.
books and that kind of thing. But that was a good. He spurred me on
Right.
to get in the car and come.
Well, I'll tell you, it's a great day whenever we can get you in. It's gonna be good. We thought, why not record a podcast, talk through what we're seeing in the markets with
Sure.
you, talk about the process, talk about Dorsey Wright. I've got a couple questions for you planned out, so I figure we can just jump
Well,
into it.
in fact, we're doing podcasts. We were one of the first podcasters
Right.
out here when podcasting began. I wanted to jump onto technology as quickly as possible. And that's why we went online in 1993, I think it was. So that we stepped out and we started doing technological things.
Right.
And the podcast was something I said, we have to start doing this. And we did the podcast every single week. And we would get the group in together and we would just sit down and start talking.
Yeah. Well, we've
And
kept that tradition
we've
going.
had everything from
Yeah.
Jim Rogers to come down, all kinds of people.
Yeah.
Yeah,
Well, we've kept that tradition going. Like I said, we're over 1,000. We just hit that last month.
that's fantastic.
Speaking of, I mean, taking you way back, let's talk about the origin of Dorsey Wright and Associates. The first time that you saw a P&F chart. I know that was probably before then, but let's bring it that. What was did the chart speak to you? When did you first start utilizing point and figure charting? When was the first time you saw a chart? Let's just start all the way at the beginning.
Okay. Let's jump forward from where I was a broker at Merrill Lynch,
Okay.
your basic stockbroker. And then I was offered around 1978 an opportunity to come across the street to Wheat First Securities, which was a very large regional brokerage, and to start their option department.
Right.
And options were what I specialized in when I was at Merrill Lynch. So I went across the street there and I started the option department. I had to hire people. So the first person I hired, his name was Steve Kane, became a great friend of mine. And he brought with him a little paperback book. He said, I'd like you to read this book so you understand the operating system in my mind. So when I come to you with stock and things like this that I think we could probably do here or put into a report or whatnot, you'll understand how I think. And I said,
Hmm.
yeah, well, I said, that's a good idea. So I took that book that weekend to Virginia Beach with my wife, and I was reading in bed. I started reading the book, and I went to the introduction. And being dyslexic, reading is difficult for me.
Right.
Although I taught myself to read on a college level, it took a long time, and we didn't even know what dyslexia was until the 1970s, and I had graduated college. So reading is not something that I just sit down and grab a book. I
Right.
listen to books now. But this one I started, and I started reading the introduction. And I got down to the third paragraph, and I looked at the next page, and there was a picture of a point and figure chart. No writing, the picture was there.
Right.
And I looked at that picture, and I saw points of support, points of resistance. It didn't have to say anything to me.
Right.
And all of a sudden, I realized I'm home free.
Yeah.
This is what I'm meant to be doing is point and figure charting.
Right.
And that's the point. That's the time when I realized, are you talking about AI? I realized that point and figure was computerizable
Right.
because computers already knew ones and zeros.
Yeah.
We'd done all those punch cards and things like that with a one and zero. You got an X and an O.
Yeah.
So let's make the X a one, O will be a zero, and now we're computerized.
Right.
And that was the beginning. And that's one of the reasons that I was able to go online in 1993 and one of the first on technical analysts online.
Hmm.
So that's where it first came from. When I realized the point and figure chart spoke to me, I thought to myself, this is what every advisor needs.
Right.
And I need to start a company to do this. But I couldn't go back to Wheat First Securities and say, hey, I just started this department, I'm leaving,
Right. It
you
doesn't
know?
make sense. You can't do
So I
it. Hey,
said,
welcome. Right.
better I take time and learn the subject extremely well. So it's like whenever you're interested in doing something, you take a megaphone and turn it upside down. So the big end is here.
Hmm.
And the big end is there, which allows you to have a vision at the end, which is the whole. That's where you want to be. That's go time.
Right.
And in the big end, you can make mistakes because there's room. Oh, I shouldn't have done that. I should have done this, should do. Then it gets down tighter and tighter and tighter. And you can't make those mistakes. And then it gets down to that point. At the end, that's go time.
Right.
And that was go time for me in 1987. I realized at that point I was ready. I had to go. I had no money, borrowed $90,000 from Dominic and Dominic, and left Wheat and went down the street with who became my partner, Watson Wright. He was my right-hand man in my option department. So Dorsey Wright started in that respect. And the reason that I started it was a vision I had of a little old lady who lived out in the country, who had a better life because she was advised by people who were taught, trained, and supported by my company.
Hmm.
That was it, plain and simple.
Right.
It developed into more than that. And the next thing you know, we're flying.
Right. Oh yeah. Well, there's a lot there. I want to go back to the one of the first things you said was you're looking at a picture, right? Because, with the dyslexia, it's difficult to go and read it, right? And there's a lot of noise, right? And our tagline is cut through the noise and everything like that. There's a lot of noise that can come through with analysis that is written, right? People have to fill up a page, so they write words, right? But, to your point, you can look at a picture, you can identify a price target, a point of support, a point of resistance. You can form an opinion without having to read through all of the fluff, let's put it that way, that some of these analysts are putting out there, right? So, that has been one thing that's stuck out to me is, hey, we don't have to look and read all the words. We can just figure out a picture, and that will tell us where we need to be, if we want to be long, if we want to be short, everything like that. So that has been part of the process. And to your point, helping people at the end of the day better their lives because of the system. That's the kind of the name of the game, right?
That is the name of the game because back in the day when we were stockbrokers per se, it was all about commission,
Right.
plain and simple. And then Schwab comes online and offers discount. And oh boy, we didn't like that.
Right.
We hated to hear that discount stuff because we worked on commission. But then as things went further, there was no commissions and it was like a fee. Okay, you're gonna pay a percent fee. That's it. So that opened the door to be able to do whatever you wanted with the customer in mind,
Hmm.
not with your bank account in mind.
Right. Yeah. No, it's a fair point. And when we kind of evolve essentially as we go through the decades and everything like that, you start to build out this process, right? We talk about offense, defense, everything with the client in mind. The client talk about emotions, right? The client is going to read the news, they're going to read the headlines, they're going to be fooled by all of the writing, right? That we're talking about. And so it's important for us or the client to have a process to look back on, right? And so talk to me about how you think Dorsey Wright helps with that process, and then kind of ultimately, what the end goal is as you're kind of looking at charts and how advisors can fit charting into that process.
Here's one of the things. Back in 2008 was a great year for me,
Right,
not for everybody else.
right,
But if you were looking at the Dolly, dynamic asset level investing, that Dorsey Wright puts out, and it says, where should you be in asset classes? Plain and simple, where should you be? Would not let you be in any stock. The stocks were 5 and 6 all the way down to the bottom. I mean, you
right,
you couldn't justify owning a stock. And the top ones were fixed income, treasuries, real estate, things like that.
right,
So I look at 2008 where people say that was a hell of a year. It was a great year for me.
right.
All you had to do is open your eyes
And look at what the price was telling
and
you.
look at what Dorsey Wright
Yeah,
was putting out. It's that simple.
yeah. That's process, right? Of like, hey, we're not looking at the headlines, we're not looking at this, we're looking specifically, taking back to PNF, the relative side of things. We're deciding what's relatively strong, what's relatively weak, and we're not letting the words tell us, we're
That's right.
letting the price tell us,
That's
right?
right. The price is going to tell you. And when something is relatively strong, you know that's where you want to be.
Right,
Plain and simple. When in 2008, US stocks and international stocks were at 5 and 6, you couldn't even make a case for
right,
owning them. Boy, what that would have done for a lot of people.
right. No, it's a very good point. And to talk about again fitting that into a portfolio, right? How have you seen or how have in your time, how have you seen clients fitting that in? Again, you've got Dolly, right? You've got the technical attributes, which is a stock rating system. How have you seen, or I guess, what is the most used way that most of our advisors or clients would fit that into their portfolio? Is it really just through looking at the broad asset classes through Dolly, or was it kind of granular on the stock level, or was it some way form both?
Well, you need to look at the big picture to begin with.
Right,
That's the dolly. That's the broader classes. Should I be in international equities or US equities, or what's the mix? Well, US equities, let's say. That's the play. Okay, now we go from there. So we go from the top, arthritis. And then we begin to drill down.
right,
And then you'll go from the top. Well, should we even be in US equities? If the answer is yes, then where?
right,
It's right there in the dolly. Where's the sectors we should be in? Right there. And within those sectors, what stocks should we be in? Relative strength. I
right.
mean, it is think of the right word. I mean, it's almost like AI. It has always been AI. You can ask AI now. I mean, like a portfolio I put together a few weeks ago, I think is a great portfolio. It's the Standard and Poor's 500, and you query, let's say Copilot or some of these other ones, say what percentage of people on Wall Street, the top money managers and hedge fund managers, ever outperform the S&P 500? Well, the answer is 14%.
Hmm,
Well, if I want to be in the top 14%, not bad, own the S&P 500.
right,
But what might I do to maybe reduce the standard deviation, reduce the risk metrics? I looked at it and said, why don't we take, if you have 100% to invest, 100%, take 50% of it and buy the SPY or SPX. I
right.
want to own the Standard Poor's 500. Take 25% and own the SSO. That's double beta. So I
Sure,
took 25% and bought 50% in essence of stock. I still have 25% left. I take that 25 and put it in the top five once a month, relative strength in the Standard and Poor's 500. So that's an arm wrestling contest.
right. And utilizing a matrix to define those, correct?
That's right.
Right. Okay.
That's
Perfect.
right.
Yep.
Absolutely. It's right there at Dorsey Wright. And the simplicity is unbelievable. You put that together, now you got something. And it's simple, it's straightforward. But you might say, I want smaller cap stocks. Russell 2000. We do the same thing. Or I say we do. I do,
Right.
you know, do those. Russell 2000. Let's say you want Nasdaq. You want your pie in the sky. Nasdaq, same thing. Create your own positions.
Yep.
So it's all here. It's all for the taking. And Dorsey Wright, your modeling system is the best anywhere. Period. And that's what people want is the modeling system. That's what they need to use. And you even have it now on the free side.
Right. Yeah, there's concepts of the foundation that are, out there in front of everybody and they can utilize and kind of looking around the model system and the matrices that we're talking about. I think one thing that we're talking around that I do want to hit on is the scalability of the system and the methodology behind it, right? You mentioned for, your kind of core or your average portfolio, you go ahead and you put 50% in the S&P, then you lever up a little bit with SSO, then you've got a little bit of a stock selection process going on behind the scenes. If you're an advisor, right, and that sounds like, you can't have SSO in there, you can't include leverage or whatever it is. you can go out and find another model, right? Like w without changing up your daily routine too much, I think is the point that I'm trying to make. You can plug and play these models for clients of different risk tolerances. Like you said, if you wanted to look at the Russell 2000 and replace a small portion of that stock sleeve with portions of that, or the Nasdaq 100, whatever it is, it's scalable in a way that you can say, okay, hey, I've got a risk averse client. Let's put them sleeves in this, right? I've got a more risky client. Let's put sleeves in this, right? So that's that kind of portion.
That's the beauty of it.
Yeah,
That's the beauty of Dorsey, Wright, and Associates. You put them in those sleeves and they're auto run for you.
right.
What more could you want? That gives you
Yeah,
the ability to go out and get more customers to help.
right.
It's magnificent.
Yeah, no, I mean, again, you think about the what was your analogy? The lady on the farm who was helped because, her advisor had more time to go out and get more clients, right? And help more people, right?
Right.
That's the name of the game.
Because he was advised by Dorsey, Wright, and Associates.
Correct. Yeah. Very fair.
Yeah. And it's here for the taking. And now I realize today that you have this free site now with the models on it. Oh man, everybody under the sun should come in. I'm telling you.
Well, we would certainly love that, right?
No, I'm serious.
But yeah,
I'm
yeah,
quite serious.
yeah.
I wasn't even aware of that free section that you now offer, and you're bringing in eyeballs to look at things. Oh my God.
Again, helping people is the name of the game. It's just in a different flavor and giving people access to a limited portion of the research or the models, just like we've been talking about. That is our way in 2025 of doing that, as well as you've mentioned, the kind of the full suite with the full research and everything like that that we've got, of course, as well. But yeah, I mean, it's been
Well,
great.
how would a person come in and do that? Just go to Dorsey Wright, NASDAQ
Dorsey,
Dorsey Wright,
yeah,
and
Nasdaq Dorsey, right? And then that'll bring you over to the page, right? And then you can log in, right? You can get a trial of the full deal, or again, you can come in, visit once a day, read a little bit of research each week, visit a couple of different charts, look at some of the models or other things available to them, and continue to utilize it in little bits within your practice.
that's magnificent.
Certainly.
I'm telling you, if every investor doesn't come do this, they're crazy.
Well, I appreciate I know we all, again, we wish it is, and I believe it, everything like that. I want to switch gears slightly into a couple of different points from the market, right? Just getting your point. Now, I want to warn you, we can't give specific advice on this one. But I do want to get your idea. There's a lot of people, and it certainly feels this way. Markets are moving really fast, right? With exhales, right? We get a big decline within the market on Liberation Day or the kind of subsequent week after that. And then, we're down 10, 15% in a week, and now we're up at all-time highs just, about 2 months later, right? Markets are moving seemingly faster than ever. Does that pose any curveballs for trend followers? And if it does, um, how should our clients be looking at markets differently with things are moving faster? Does it make sense?
No,
Okay. So markets are moving faster, right? Is that a fine starting premise?
when you look at markets moving faster, slower, whatever, you got a bullish percent index.
Okay.
And that bullish percent is the best market indicator around. It doesn't move that much. It doesn't jump around a lot. And it takes a 3-box reversal to make a change. So what it is, the bullish percent index is taking all the stocks on the New York Stock Exchange and putting them through an arm wrestling contest. And as more stocks go on buy signals, as more buyers than sellers happen, it's going to move up in a column of X's.
Right.
In order to move to a column of O's and defense, that's a 3-box reversal. You're going to have a 6% change.
Right.
And that doesn't happen that often. So things may move fast in the market, but they're not necessarily moving fast in the bullish percent index. We are right now reaching highs.
Right.
And this could be a point at which we get some kind of reversal, but you want to watch for the reversal. It doesn't necessarily have to happen.
Right.
When it happens, it happens. So you keep your eyes on that New York Stock Exchange bullish percent index, and that's what you need. So things can speed up, slow down, do whatever they want. Let that be your guide.
Okay. Yeah. No, that's a very fair, very, very, very fair comment.
And like at Wheat First Securities, the head of research there was talking to me one day in the hallway. He said, Tom, He said, you know, you're a lot better off buying stocks that are going up than stocks that are going down. And I thought, what a trite statement that is. Then I started thinking about it. He's dead right.
Right.
You know, if you've got a stock, it's on I-95 North, and you know that by the point and figure chart, and that's the X's,
Right.
then that's one you want to be owning in general.
Yeah.
And if the opposite is in O's and declining, one you don't want to buy. So the Wall Street Journal did a story on me, and it was a front pager. And the the caption is buy stocks that are going up,
Right.
plain and simple.
Seems simple.
Instead of I'm going to buy on pullbacks. I'm
Right.
going to buy when the stocks come down, I get a better price. Then there's even a better price. You're better off buying stocks that are doing well. In fact, it's very hard to beat. If you take the stock that did the best the previous year, it'll probably do the best or close to it the next year.
Right. Yeah, that's that kind of like winners keep winning idea. Yeah.
That's right.
Yeah. We've actually done a couple different pieces of research that you might be interested in recently. It's like with markets at all-time highs, are you best just continuing to buy, or should your clients be waiting for pullbacks, right? And I bet you know what the answer is. You should just keep buying,
That's
right?
right. Exactly.
So, a strong market, a strong stock that feels overbought because of the headlines, most of the time, it's actually just a name you should continue to buy. Again, we say most of the time because there are, of course, going to be exceptions,
Sure.
right?
Sure.
But most of the time, you look at it and you say, okay, hey, just keep buying what's going up, right? That's the kind of trend following idea. I-95 North, as you
Yeah.
said. So speaking about areas that are just continuing to go up, and I know you wanted to talk about this, AI, right? That's been kind of the center focus for this most recent rally, all up to new all-time highs. Really been the focus of the rally over the last couple of years. How is AI, again, speaking about markets moving faster, how is AI changing the way markets move? How is, if at all, do you see AI changing the way markets functionally move in terms of orders and things like that? Let's start off with maybe the performance. Do you think that AI is going to continue to, push markets higher, or what needs to happen?
Yeah, I think that will happen, but this is nothing unusual.
Right.
We've had these things happen all along, and that's why the markets will have a tendency to continue moving higher. Because as peoples, we get better. We drive better cars. We have better houses. We make better bricks to make those houses. We do things that are better. The economy gets better. Think about where we were in the cars well, you weren't in 1974,
No.
but the cars we were driving in 1974 versus now driving a Tesla.
Right.
Look at the difference. And this is what causes the market to continue to move higher. So I wouldn't worry about it.
Just continue, just
Yes,
okay.
unless we get to a point where it's like in 1929 again, and you have a major crash, and manufacturing just goes out the window, and we don't get better,
Right.
and things get more tough for the individual investor. People can't buy a house. They can't maintain
Right.
the
Something
debt.
breaks in
Something
the,
something breaks,
yeah.
and we're no longer advancing as a society. Then the market's not going to do it either.
Right. Yeah, well, there's the whole saying is markets, they don't like uncertainty, right? They are an expectation or a picture of future expectations, essentially. And so, as long as, like you said, people feel comfortable with where they are, unless something breaks, right? People feel comfortable with the future of the market. It won't be reflected as such until, the economy essentially, falls apart for some reason. That might be a little bit of a
But you
bold
see,
statement,
but
but
here's the thing: you can go back in time and you see points that new ideas
right.
come on stream. The computerization. I remember when Hanes underwear store went online. They said we're going to start selling our underwear online. Stock went straight up.
Right.
So
Yeah.
I mean, Hanes underwear and the .com craze. Those are things that push the market up, that push the economy up. There's always something interesting coming. So AI is going to lead us to something else. This isn't going to be the end of it.
Right.
AI is the beginning.
Hmm.
The AI is what I saw back in that point and figure chart in 1978. When I saw the X's and the O's, I said that why can't the computer do this? We were updating 2,500 charts by hand every day. We had no computer that would do it. So we would 500, the analysts here, Dorsey Wright,
Right.
500 stocks. They would update that day and pass the book on to the next analyst until all the analysts had seen all the charts by doing it by hand.
Yeah.
That's what we did every day on relative strength charts. Well, we were the first ones to be doing relative strength. Tammy, who was my right hand at DWA, she would do, when she was 16 years old, she came with me. She would do like 100 relative strength charts in a week. In a week.
Yeah.
How many do you do a night now?
I mean, thousands and thousands
Oh
and
no,
thousands.
millions.
Yeah, millions.
Yeah,
Yeah.
you probably do 40 million
Yeah.
in a night.
Yeah.
We did 100 in a week. So when I saw that X and O, and I said, this could be a 1 or a 0.
Yeah.
I didn't realize what I was getting at because we didn't have computers and things that at that point. But man, that was the beginning
Oh yeah.
for us.
Well, and like you said, I mean, it's systematization of, the whole process and everything like that. I do want to ask a question because you mentioned .com. Of course, whenever .com is mentioned, people get a little scared. What are you watching, or what would you be watching on the platform, Dolly, the bullish percents, because price will tell us if things are going are rotten underneath the hood, right? You think back to 2008, you think back to the early 2000s. Price was telling you, right, things were rotten. What are you watching in today's market environment, or what would you suggest advisors watch on the platform to tell you if things are rotten, if things are overheating in the near term?
Well, we were having fun the other day and thinking about all these politicians we have here and that. So let's go back and watch some of the Ross Perot's
Right.
videos when they would talk to him online. And to answer that question, it would be just like Ross Perot would say, when you're driving your car and the engine light comes on, you have a problem. Pull the car over.
Right.
When you're looking at Dorsey Wright and the engine light comes on,
Right.
and it says all of a sudden US stocks are no longer the place to be, or whatever sector you're in has fallen out of favor, you want to consider crop rotation.
Mm-hmm.
It's time to take the corn out and put the sorghum in. But those indicators will tell you. So you call it the dolly, it's the dynamic asset level investing.
Right.
And what that is, it takes the macro picture, says where should we be? And from there, we can then break it down into what sector should, because it'll tell you what sector, and then break it down further into the individual stocks in that sector, and then break it down even further to the relative strengths in those stocks. And now with AI, done like that. Done like that.
Yeah.
I asked it the other day. I went to Perplexity, which I find is the best out there for research and that type of thing. And I said, I want you to give me on Dorsey Wright relative strength calculation the five top closed-end funds in the closed-end fund universe, the whole universe,
Right.
that's yielding 8% or better, that has paid a consistent dividend for 10 years. Oh, that took about 5 seconds.
Right. What would have taken all the, yeah, you had to go through, you think about Tammy going all those RS charts. Yeah. Yeah.
About 5 seconds.
Right.
And there's my answer. Now I can take that and go begin doing something else.
Right.
So my productivity increases tremendously because I have all that hard work done
Right.
that fast.
Yeah. No, it's a massive, and then you think about all the different sectors. There's a lot of clients who probably want exposure to AI. You can get into individual AI. You can get into the guys that are selling the chips to get into AI. You can do the guys who are, essentially using AI. You can go anywhere along kind of the AI spectrum, essentially, to go get exposure. And the best part about it is keep talking about relative strength. Relative strength will tell you what part of that spectrum is improving, or
Exactly.
something along those lines, right?
You just ask Perplexity to do that relative strength, look along the spectrum, and ferret it out for me.
Right.
Done.
Or if you wanted to keep it on Dorsey Wright, you could throw it into a model and that all those names into a model, and then you could say, hey, run a matrix of these names and tell me which ones are best.
Oh,
There's a million different ways
we
you
do
could
that every
slice
day.
it, right?
We do that every day. Tommy
Yeah,
Walker works with me, and you may have seen him when I used to teach at the state penitentiary in 1984. But he comes over my house pretty much every day,
right,
and we do these things. And he is so deep into the relative strength in the Dorsey Wright system. Just the other day, he's telling me, he said that the Dorsey Wright system is the best on the internet, available anywhere, anywhere. And here's a guy, 28 years, he was doing this in the cell. And he's updating 250 stocks by hand every day with the Wall Street Journal.
right,
And he became one of the top point figure people in the world. So once me and his mom got him paroled, I hired him at DWA. It wasn't it was but get the best.
right. Yeah,
So I
that's
did.
crazy. Yeah,
So now he had little problems after that
right,
and had to end up leaving DWA. But now he's 68 and he's into this like you can't imagine. So
right.
we do this stuff every day.
Yeah, where you just go throw stuff in, see what's relatively strongest, all that type of stuff.
Yeah,
Yeah.
yeah.
Yeah. Well, I'll tell you, I mean, it's been absolutely, yeah, I've been here for about 3 years, going on four as an intern before everything like this. I have taken a full circle, seen how much our platform helps people, right? People call in and, they're saying, oh, how's Tom doing? Does he still come around? And I'm like, yeah, he still comes in every once in a while. But, seeing how much, the platform helps them save time in their day so that they can go help their clients to go prospect and find more clients is absolutely incredible. So I will leave that there. Any other thoughts? I mean, we could go on and talk forever. I want to give you some time if you got closing thoughts or questions or anything like that. Now's your time.
They would go too long because I have a ton of thoughts,
Yeah, yeah,
you
yeah.
know. But we'll say that for another one.
Yes, sir. Okay. Well, I appreciate it. Tom, appreciate you coming in and having everybody on. I know everyone will certainly love listening to this and to the next one.
Anytime, it's a lot of fun.
Yes, sir. Perfect. Appreciate it, y'all.